Good evening to all of you. Welcome you to today's webinar. Today we are going to have a discussion on the performance, March month performance, and also look at the possible scenarios for this coming month, which is April, which is running right now. Similarly, for Bank Nifty also, we will look at what happened last month and what is the likely scenario for this month, which is running right now. Similarly, we will also look at some stocks, time permitting. Otherwise, we will carry it forward on some other day. So now, Nifty, you may be aware that still the market is bullish because overall Nifty is still trading at let me say. Okay. So now Nifty is still above the 200-day moving average, right? Now still it is trading above 200-day moving average and is also trading above 100-day moving average. So sorry for the technical delay. Because of some net problem, we could not establish contact with you for the last couple of minutes. So now we will revert back to the performances that's taking place in the Nifty. Now we have seen Nifty oscillating between, so for example, the entire movement this last month was confined more towards the 14,250 to 15,300, right? We are still not getting Nifty here, so we will look at Bank Nifty. Okay. Okay. So we'll just look at Nifty manually because we are not getting the chart. But as far as we'll then proceed to Bank Nifty. So now Nifty last month it established a trend which is between 14,250 and 14,000 and 15,250. Okay. So it was 15,250 to 14,250. This was the range last month, right? So around 1,100 points is the range. Now Nifty closed almost at the lower end of the range. It closed at around 14,330. This was the close of last month. So if you look at the pivot point for this, I think it was more towards the 15,250 to 15,300, we will take probably 15,300 for our calculation purposes. So if you look at this, what is the average PP here for this? 14,250 plus 14,330 plus 15,300. So the average is 14,626. Now the close of 14,320 is definitely below this 14,626, which means there is a very high probability that the market can slip. Okay. So we have to look at where is S1 and where is R1. Okay. So S1 now comes to be 14,626 into 2 minus 15,300, right? That comes to 13,952. 13,950 to 952. And this is this one. So R1 is going to be 14,626 into 2 minus 14,250. That is 15,000. So the market is hesitating to cross this particular place. So we could probably, as long as this 15,000 is not broken, the chance that it can slip down to 13,950 or even slightly below, because there is a greater probability that since it is closed much below the pivot, it could even drop below S1 to S2 levels. It could drop itself between S1 to S2. So what we should now look towards is probably a shorting position, keeping 15,000 or 14,900 as a stop loss. So the trade right now, it looks like this. $14,900 levels is a key resistance right now, because that is where it went up, came down, went up, came down. So you keep this as a stop loss. Okay. So go for any short towards this. Okay, towards 14,900, keeping 14,900 as a stop loss, and a target which could be probably now the 100-day moving average is coming closer to the 14,050 levels. So there is a chance that probably instead of S1 13,950, so it could probably slip down to 14,050 and then rise from there. Probably by 400, 500 points, then probably can also fall. The worst probable thing that could probably happen for this market, if things don't deteriorate further, is at 13,600. You remember, this is the place from where it had a post-budget rally. That is, after the budget was announced, the rally took place from 13,600, went up to 15,400. So it looks as if there is a retracement, the retracement could probably halt towards 13,600 before a new bull rally takes place. So right now, we are not out of the woods as far as 13,600 is concerned, because S2 is still a little far off, because S2 could be coming closer to 13,500, because we have seen that the general difference last month is 1,100 points and 14,626 is the average, right? So 14,626 is the average minus 1,100 points. So a 13,500 approximately is a possibility. So we don't see much difference going below 13,500. So it could come because it closed below the pivot point. There's a chance that probably the market could come between 13,500 and 13,950. So first the 100-day moving average is coming, which probably could be a first support, 14,050 or so. From where probably we could see 500, 600 points of rally, 600 points of rally. So it could come back to 14,600 levels, and from there probably again there can be a fall. So this sort of up and down movement can take place in this month probably, and then breach the 13,950 to 13,500, 600 levels. So with that hope, we should be now looking towards to take off the market for a shorter position. So we should go for a short position, keeping 14,900 approximately as a stop loss. So this is as far as the Nifty is concerned. We have analyzed it from the pivot point. We have also analyzed it from the moving average, because the moving average of 20 and 50 is resisting it around the 14,900. 100-day moving average is coming closer to the 14,050. And for the entire move from 7,500 to 15,400, the first Fibonacci retracement, that is 23.5% or 23.6%. Now that Fibonacci move from 7,500, which was the last April low, to the 15,450, right? So this is approximately a 7,000 point rally. For this, if you do a 23.5% calculation, it comes to 1,645 points, and 1,006 minus 1,645. If you look at 1,650, if you take it, it should come closer to 13,800 levels. So I think we should be looking towards this particular level as the most important support level, from where there's a good chance that the market can start pulling back again for a bull market thing. So 13.8 to 13.6, closer to that is a possibility in this month itself. So because it closed quite bearish last month, and today we don't have any positive trigger points till now, because we have got more negative trigger points because of the rise in infection, and also the lockdown which is taking already Maharashtra has imposed a lockdown, partial lockdown, with many more states likely to follow suit. Probably there can be a little more fear in the market, and there can be a push down to 13,800. After which I think probably coming months it will again start to rally. So we should be looking towards a below 14,000 level as a good level to go for investment, and a potential fall to 13,800 is a possibility. So this is as far as Nifty is concerned. So we look at the Bank Nifty, where Bank Nifty is right now. So this is Bank Nifty chart. This is the monthly chart that we have, and see, last month has been quite a heavy fall, and the close is more towards the low of the month. If you see, the close is towards the low of this month, and so definitely we could probably expect some supports coming at these levels. That is the last important top, which is the 32,613. So now it is only exactly at that place, 32,600. It is even 32,335, and so it came very closer to the same place. So this area is likely to be breached. So this is an important support levels, and if this is breached, then in that case probably we can expect a little more pullback to take place in the market. So let's look at the market from the pivot point of view, where it could be. The high last month that we saw is 36,497, 32,415, and 33,303. So we look at the average for this, 36,497 plus 32,415 plus 33,303. This is 34,071. And it has closed it has closed below that. So 34,071 is the PP. So we could at least expect S1 to come. So which is 34,071 into 2 minus the high of the month, which is this. This is 36,497. Right. So let's look at this into 2 minus 36,497. 31,646 is the S1. So this is a very likely chance. S2 is even a little lower, and last month difference in S2 is this is a 4,000 points low. I to low is nearly 4,000 points, right? So 4,036,497 minus 32,415, it's approximately 4,082 points. So this minus 4,082, so we should take it clearly towards the 30,000 mark. which could be another 5 to 6% down from this place. So S2 probably need not go up to S2, so it could stagnate between S1 and S2. It could stagnate between S1 and S2. So we will look at the Fibonacci ratio for this, for the 23.5%, whether we are getting anywhere. That's very far off. That's 23.5 as it's coming at 31,600. So 31,592 to 31,600 is the first place where probably Bank Nifty can take place. That is where we have talked about S1 also. So another 1,000 points fall is likely, 32,678 to 31,000 and odd. So another 1,000 points fall, another 3% fall is probably in the offing as far as Bank Nifty is concerned. And from there is a chance that it can bounce back, because that is a 23.5% retracement. That is also the S1. So good chance that it can bounce back at the particular level. So we will look at the weekly chart for this. Yeah, the weekly chart definitely, it looks quite a little bearish. Let's look at, we are seeing lower lows and lower tops. So as far as this Bank Nifty is concerned, we are seeing the weekly chart on the weaker side. So I think for the time being, we should keep this particular high. This high, today it has broken last week low. So 33,990. So 34,000 is going to be a little difficult for it to penetrate, right? So 34,000 is where probably we talked about the PP also for this month. So 34,000 is going to be a very strong resistance, and 31,620 is the first support that is likely to come. So we can sell on any rally right now, put 34,000 as a stop loss. Now we look at the daily chart. So now, see, the last couple of days, now it went up to 33,990 and has come. So any rally towards this particular low, which is 33,150. So you can short closer to 33,150, put 34,000 as a stop loss, and wait for a fall towards 31,650, which is also the S1 for this month, and also a 23.5% retracement of the entire move. So Bank Nifty also looks to be a good candidate to go short at another 500 points rally from here, and then for a full take of profit at 31,650. So you've got 1,500, 1,600 points of possible play that you can make by shorting Bank Nifty at slightly higher level. So this is as far as Bank Nifty is concerned. Overall, all the stocks still, even now, Nifty, Bank Nifty are all trading above the 200-day moving average. So that gives the hope that still the overall trend, overall big picture scenario is still bullish. But at the same time, we have to see the short-term trend also turning in favor or in line with the main trend. So we should see at least Bank Nifty. Now, since it has fallen below, so we can start trading in a bullish manner only if 34,000 is crossed. If this 34,000 is crossed, then only probably we will get the strength to go again long in the market. So till that time, I think the shorter term trend is not in line with the bigger trend. So normally what we should do is, we should keep most of that different time trend in our side. So right now we have a daily trend on the downside. Weekly trend is also on the downside. Monthly trend is still on the upside. So we should wait for the daily and the weekly trend also to turn on the upside before we go for a full bullish view of this thing. So right now, I think if you don't want to go on the shorter side, you can just ignore for the time being. The longer term for investment in Bank Nifty, the first place could be 31,650. And the shorter term trading call is to short Bank Nifty at 33,100 levels with a stop loss of 34,000 with a profit target close to 31,650. So today, right now, with the scenario looking set to change as far as because we have had one full year of big rally from 7,500. We have seen almost an 100% rally taking place back to 15,500, 15,400 levels or so. So almost a very huge rally from the bottom. So this definitely would go for some correction. But corporate results are coming in April, so if this is good, and if the infection thing eases, or if there is no further intensity of lockdown, probably we could see a rally. And so after a month or so, probably April could be slightly bearish, but again come May, I think probably we could see the market again reviving itself next month. So probably we could see a bullish case scenario emerging next month after the market absorbs the problems of the new wave of infection that's taking place. So right now let's look at some of the stocks, because today if you look at it, the IT stocks performed slightly better, and the other stocks, major stocks, didn't do well, including banks. So if you look at a few stocks and see where they stand as far as the trend is concerned. So let's look at Reliance Industries, which is the most important stock in the index. So the big picture, monthly chart. Monthly chart is on the upside. Monthly chart is on the upside with because of the break of this particular this one, and so we should be looking towards buying on any dips towards this particular low, which is 1855. So right now it's 1992. So there could be a possibility that it could come down a little bit towards the 1834, 1835 levels again before it starts to rally back. So I think wait for some more drop as far as Reliance is concerned before you go on the long side. And for that, what you can do is you can also look at the trend line connecting these two. So let's look at the weekly chart. Now that's fallen. So now this is the area where probably it should have taken some support. That is this low, which is 1973. So now that's gone. So 1973 is gone. So we should be looking for a slightly bearish situation as far as Reliance is concerned, which probably could put it back down to these particular levels, which is 1905 to 18. This low is 1895, right? So 1895. And the last important low is 1830. So it could probably, this 1830 can hold, and 1895 is possible. And this break is not good for the market right now for Reliance. So I think 1973 being broken today, I think is not a good sign because there's a chance that another 5% fall in Reliance. Another 5% fall in Reliance is possible. So now we will look at the some of the other stocks. So again, Reliance is a stock which probably looks to be bearish in that shorter time frame for another 5% fall. Now let's look at Estfc Bank, which is another important stock. So this is also Estfc Bank is also after a huge rally a couple of weeks back. It has started to correct now a little lower, and probably we could now see HDFC also now going down to this particular level, which is the 1342. Normally stocks correct itself by around 12-13% from any peak, and then probably a bigger correction could take it rounded somewhere 24-25%. So we look at where this issue of 11-12% comes as far as the HDFC Bank is concerned. So it is 1631. So 1631 into 0.88, this is 12% correction. It could be 1435. And already it has started to come closer to that, right? So this is now 1432. So I think the fall is going to be more than 12%. Then in that case, we could be looking for extension of this particular this one, and so we could now look at the bigger trend line picture. So this So this is a so this trend line is going to give support on any fall. Right. So this line, and so any fall, deep fall, should give support closer to the 1378, 1380 levels. So probably 1450, it could drop down to 1370, 1380, which should provide a very important support, because this line, this trend line, has not been broken in its full rally, and probably we could see this time it could be holding. This particular line could be holding. So let's look at 1370. This line which is coming 1335, right? So okay, slowly extending itself on the upside. So 1350. So let's hope that 1350 is a possibility, which is probably another 70-80 rupees, which is another 5% fall. That's what I'm saying, that most of these stocks are looking towards extending for a 4-5% fall, which means Nifty, which is around 14,600. If most of these stocks are going to fall by 5%, Nifty also, because these are all same heavyweights, so another 4-5% fall is possible as far as Nifty is concerned. So Nifty normally, it drops by 1,100 points from any top to bottom generally. Now if you look at it from 15,540, initially it had a fall towards the 14,400 levels, 1,000 points approximately. So if you extend that same thing to 14,850 levels where it rallied, minus 1,000 points, it will be around closer to 13,850. That is what we are saying, that probably Nifty, the 23.5% also comes at 13,850. So another 500, 600, 800 points of correction in Nifty, which is 5%, is a possibility as far as Nifty is concerned. So at this point of time, we will hope for getting Nifty, Estfc Bank and Reliance could probably drag Nifty also a little lower. And let's look at some of the other important stocks, one or two important stocks like ICICI Bank, Maruti, and then TCS. Now this is ICICI Bank. Weekly chart is down, so I think we should go along with this particular trend of weekly chart going down. So I think we should see markets heading towards a lower level as far as ICICI is concerned, as far as market also is concerned. So we should now looking at this. This is 679. And so if it is going to extend itself to a full-blown thing, it could be into 0.75. If it is a 25% correction, then in that case 510 to 540, that particular levels can come. So I think this particular high is the is around 561. So for probably first it can take support at 561, or otherwise if there is a bigger fall, it could probably get itself towards 512. So 510, 512, I think probably is the area where probably the there is a good chance that ICICI can take support, and that will also be corresponding to a 24-25% fall from the top. So which should give rise to a new bullish trend from that level. So and also let's look at the 23.5% retracement for this. So the first 23.5 is 572. So that's likely to be taken off, and 38.6%, 38.2% comes at 517. So if ICICI, because the weekly trend is down, so a move towards 516, 517 is possible, which is another 50%, which is another 10%. Because ICICI and all is slightly more volatile even when compared to Estfc Bank. Estfc Bank 5-6% fall could translate into something like a 10% fall in ICICI. So the index could probably drop by 5%. So be prepared for a Nifty of 13,850, and the ICICI stock could be down to 520 levels. So we will shift our focus to one or two important other stocks which normally are do very well, like for example Asian Paints, TCS. So we look at Asian Paints. Asian Paints on the weekly chart is on the uptrend after a fall which has already taken itself down to 25%. Now let's look at some of the stocks normally correct itself by 25%. If you look at this is 2849 and look at this 2260. So the gap is 20%. So a 20% correction has already taken place as far as Asian Paints is concerned. So we hope that this particular thing will hold. This should hold. So any fall probably this low level can hold, which is 2370. So Asian Paints from 2500 can fall towards 2370 because it broke the last week low, and so that means unless this is broken again, we should be waiting for the correction to extend itself down on the downside. So let's look at this particular level of 2370 as an important level of support as far as Asian Paints is concerned. So this is Asian Paints, and we will move forward towards TCS. So TCS correction is over. If you see with this high being broken, I think this particular high. So this is 3117, and with the break of on the upside of 3117, I think TCS is on the is back to climbing back to 3339. There's one characteristic of IT stocks. Normally, a couple of weeks before the results come, they start rallying. So TCS result is due somewhere in the coming weeks, so it will rally. But after the result period, normally it just cools down. So let us look at the last important high that came, and that high came. If you look at it, was 18.1. That is just coincided with a week of the results of TCS. So probably again there is a chance that probably we could look at because here also if you look at it. See, this is a period of 510 or this particular week, which coincided with the result of TCS. After that, it started to cool down. So, so you should wait for TCS or most of the IT stocks. You should buy a couple of weeks before the result, like 3-4 weeks before the result. If you look at it, see here it started to go up, right? So 3-4 weeks before the result, you need to look towards buying IT stocks. And that has been the general characteristic as far as investment of IT stocks is concerned. So we could probably look at some of the topping pattern after the result is out. So after the result, a week around that time, just look for any fading signal as far as the strength is concerned. So right now it's by chance you get within the next 1 or 2 days, you get a chance around 31.55 levels from 32.41. If it comes 2-3% down, then you be a buyer and then make a short-term gain, and then after the result is there, then probably look towards making an exit. So normally if you look at it, the fall in TCS also from 33.39 it came down to 28.80. So it was almost up 500 points or 450 points. And that coincided with something like 12 to 13%. That's what I'm saying. Generally, the falls around 13%, 14% fall. Then it becomes around 22-23% fall. Then it starts to some of the stocks starts to rally. So I think right now it looks as if TCS will rally for some more time. So the best bet now will be to look towards Asian Paints on a fall towards 2370. So very clear for investment is Asian Paints, because that's an uptrend. If the market is falling also, probably this week it has started on a slightly weak footing today. But nevertheless, I think on any correction, I think Asian Paints will start picking up first. And TCS looks good for a rally for next 1 week or so. So same thing applies with most of the other IT stocks. Now let's look at Infi. Again, Infi, just see the trend. So markets are falling and IT stocks are doing well, right? So this is the general thing, that even if the markets fall, IT stocks generally do well because they're a little more immune to these lockdown type of effects. So I think for the time being, I think it is better to concentrate in IT stocks. And if you look at it, the very clear weekly trend pattern is on the upside as far as Infosys is concerned. So as long as it does not break this particular low, I think it is definitely on the upside. So we should be looking towards buying Infosys stock. So now let's look at probably the auto side. We'll look at Maruti. Maruti on a weekly chart, it's on the downside. So that's what we've been saying, that ever since it broke this particular low, it's on the downside. So we should be looking towards Maruti even going down a little further, and probably it can even go down up to 62.70 before it starts to rally. So Maruti, the rise was towards 8329, and let's look at 23% correction into 0.765. Something like 63.70. So that's what I'm saying, that it could probably head towards this particular low, which is 62.70. So Maruti probably has a little more chance towards 62.70, and these stocks probably suffer slightly because of the lockdown effects. But the sales are still good, so these stocks will definitely start to rally from here. So auto stocks are also in a bigger correction. The only sector which is now doing well are the IT sector and companies like FM. So on the sector side, we will go with IT sector. Okay, individual stock, I think Asian Paints we can look at. Okay, and all other stocks, whether mostly auto, banks, or generally on a correction, and diversified stocks like Reliance Industries. So most of these stocks are in a correction. So I think we'll wait for some more time of a fall. And Nifty, I think, just mark this area, 13,850 on the lower side and 14,900 on the upside. Okay, this is a possibility. And Bank Nifty, we are looking at 31,650 on the lower side and 34,000 on the upside as a resistance area. So these are places which we should look at it. And for investment, I think right now IT sector in India or overall global IT sector is also doing well. If you look at Nasdaq 100, it is doing well, and we have an ETF of Motilal Oswal, which is on the N100 ETF. There is a ETF, and which can be bought like a stock. So you can definitely look towards that. And that is also on the rally board. So I think we should, if at all you want to look at some stock, I think the sector side, we should look at Nasdaq 100, which is the N100 here. So I'll put the Nasdaq 100. So Nasdaq has completed its correction somewhere here. Initially it had a fall, and for this particular high which was broken, 13,297, and so it has started to go on the rally board right now. So we should look towards more of a buy as far as the Nasdaq 100 is concerned. And from the day chart, from the monthly chart, also now it's on the upside, right? So it, after a correction, just started to go up, so it's a good thing. So I think last month low, I think will be a very important low. I think as far as Nasdaq 100 is concerned, this particular low, 12,208, which came I think last month, will be a very important low, because if you see that high which of 13,300 has been broken, which means the rally is likely to sustain itself further. So only in this particular year of 2018-19 period, where it slightly it had some fall and then again started to rally. So I think the overall thing as far as Nasdaq is concerned is good. So that will be replicated as far as N100, which is the Motilal Oswal 100 here. So you can look at N100. I think This is N100. This is the ETF which is there. And it has started to rally, right? So this has started to rally again. So we should be looking towards, because continuously if you look at it, the performance of Nasdaq has been one of the best performer in world as far as the last 10 years is concerned, returning something like 20% per annum. So I think we should be looking towards building your potential more in N100. So I think if at all you want to go for ETF, I think it's better to look at N100, because very few stocks can give a return which is more than 20% per annum. So here you are getting the index itself, and in SIP you will get even slightly more. Because some of the, of course, if you look at some of our own stocks like TCS has done well over a period of time, it might have given a 25-26% return. There are stocks like Asian Paints, Nestle would have got 35-40% return. Nasdaq 100 itself is given something like a 20% on an annualized basis for index is concerned. So if you don't want to strain yourself too much in picking up, because most of the other stocks would not have given 20%. Even some of our own mutual funds, they have not given 20% per annum over a period of 10 years period. But have given 12, 13, 14 and all. So consistently Nasdaq 100 is one index which has completely bet most of the other indices and asset classes. So I think the investment should be more focused in such performing indices. So N100 is one thing where probably you can look at it. And for investment potential, as far as Nifty is concerned, Nifty ETF or mutual fund, pick it up close to 13,850. Okay. So now I will leave it for the time being for the questions. Okay. Thank you very much. Put option, take share downside, support put option, same upside support. I'm not able to understand the question, because you said put option, take share downside. Now, if you are looking at if you are having a view that the market is going to go down, then in that case you should buy a put option. So put option, take share down right side, support. So that means you should buy a put option. That is, if you have a view that it is going to go down, then in that case you should look towards buying a put option. Now, upside support, buy or sell. See, I'm not able to completely figure out your question, but let me say now, I told you as far as Bank Nifty is concerned, now Nifty is concerned, we have already talked about 14,900 as a very important resistance area, right? So what you do is that if there is a rally towards 14,750 or so, it closes at 14,650 or so right now. So let us say 14,750 or it comes. In that case, you go for a buy put option, okay? And either you can go, because we are expecting a slightly on the downside towards the 13,850 itself. So you can look towards this, that is, so if it comes to 14,750 or so, you can buy a put option. So 14,750, when it goes to, Nifty goes to that, then you buy maybe a 14,500 put option for this month. 14,500 put option, expiry April end. Expiry April end. Okay. Now, if it goes down, let us say it comes down to 13,850. Okay. Then in case you buy a call option of 14,000. Now, whether at that point of time you have to see some remaining time period for expiry, because if it is coming exactly towards the last day of the month or 1 or 2 days only left, there is no point then in buying that month expiry 14,000 call. Then you have to buy it next week or probably that next month, May month. Okay, in that case it comes down, you buy a 14,000 call. Okay, because once the market comes down to certain level, okay, on a bigger after a bigger correction takes place, there is a chance that you can have something like a 11-12% appreciation within a month itself. So what I'm trying to say is that if it comes to 13,850, from there getting back to 14, 15, 1, 15, 2 can even be within a month. Okay, can be within a month also. So the most important thing is that around 13,850 side or so, then in that case you go for a buy call. So that is probably is what your question means. Then I think I've answered your question. Thanks very much for your participation. Hope to see you again on Friday with a new topic. Thank you very much. Bye.